Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 32,073, up 2.08%. Ethereum currently trading at 1982, up 5.17%. Let's have a look through the Ethereum tokens. If you're new, I'd just like to let you know that everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. This is a really special episode on the KS model. The KS model is a crypto technical trading model based on institutional price psychology. I have a list of things that I would like to cover off with you. I want to help you to understand that the bear market low will probably be between 43,000 to 72,900. I would like to explain why the absolute minimum high that we can expect in this particular cycle will be around $132,418. I need to explain point 3, which is what is a mathematically protected all-time high. I need to help you to understand the halving cycle phases, that's between the blue lines, the different psychological states that apply there. Then I'll talk about the bull market and the fact that it's increasing. It's increased from 367 days to 526, which was a 43% increase. We would expect the same percentage increase, if not more, to 754 days in this current cycle. The other thing, the bear market cycles are decreasing. The halving cycle, this bear market down here was 410 days. In the 2016 cycle, it was 363 days. 12% less. We would expect the bear market to decrease by at least 12%. The consolidations are also decreasing. This consolidation here of 542 days the next cycle was 513 days, which was 5% less. We expect the 2020 halving cycle to also be a minimum of 5% less at around 321 days. It's pretty interesting to note that most people think that the halving cycle is exactly 4 years. The 2012 halving cycle was 1,319 days, which is 3 years, 7 months, and 1 week. The 2016 halving cycle was 1,402 days, which was 3 years and 10 months, which was a 6.3% increase on the previous cycle. We're estimating out the 2020 halving cycle to be 11% more than the cycle before it at 4 years, 3 months, 1 week, and 2 days. The other interesting thing to note is that the severity of sell-offs in the bear market is decreasing. In this particular sell-off, we saw an 86.9% reduction. If we go across to the next sell-off, we saw an 84% reduction. There's a constant rate of reduction here that I've applied to the next bear market of 81.4%. But to hammer in the lows, I'm using an 85% reduction just for conservatism. That basically means that these lows of 43,320 and 72,900 could be quite understated, but I would prefer understatement than overstatement. I would expect those lows to be hit from around Valentine's Day, the 14th of Feb 2023. I'll come back to this later to go a little bit more in depth, but let's see how Bitcoin is performing just now. Bitcoin is currently trading at 32,101. Look at that, how phenomenal. It's got above that structural resistance that's been pushing it down for quite a while. In episode 131, the price was 31,401, which was just around this area. This is really good, but we expect this. From the on-chain and off-chain data, this is the anticipated movement in Bitcoin. One thing to bear in note is that it's coming up and hitting structural resistance at 32,414. The next critical thing is to make sure we get over there. Then the next target is 35,000. it's looking really healthy. In the last episode, I introduced you to Rule 664, unearned is returned. Pretty cute saying. It's really important to understand this rule. It applies all throughout our lives, not just to trading and investing. Many people go to the casino or they play games and they think, oh, I'll just put it all on red and just let it rock. The only problem with that is that it's not systematic. The problem with gambling is that you can win all the races and lose the last, as we discussed in a previous episode. If you're gambling inside the markets, any markets, it's best that you don't do that. Of course, gamble with money that you can afford to lose. That's fine. But if you're gambling with money you need to pay the rent with or other essential expenses, there are better ways. The better way is just to learn how to do it. This is more a life lesson. I guess it's on karma. A lot of people think that they can take something without putting in the work, but actually they put in a lot of work under certain circumstances to take things from other people. The problem is this thing called karma. Like this little guy, he's pushing dominoes over. Say he wants to rob a bank. Say he's a bank robber. Yeah, he buys the outfit and then buys the gun and plans the raid and gets his friends involved and figures out a safe house to hide in for the next 5 years to lay low, and then stakes out the bank and then figures out the plan of attack and then goes into the bank and robs it, and then he goes and hides hoping not to get caught, and eventually, of course, the police will catch him. Or otherwise he'll probably give himself up some decades down the track because living with these things is not easy. Karma is a problem, and the best way to avoid karma is not to get into that circle in the first place. Rule 303, if you earn it, you keep it. What a beautiful rule. People often look at other successful people and say, wow, they're so lucky. They just must have had good genes. No, it's not true. What people don't see is all the hard work and dedication you put in at the thing you're successful at. Dedication, hard work, discipline, all the disappointments, the setbacks, the sacrifices, the failure, the losses, the fact that you keep on trying and trying until you get it right. You learn and learn and learn. This is how you earn it. For many years, I was a senior management consultant. I would go into multi-billion-dollar organizations and manage very large teams of people and deal with the mathematics. Very, very hard to solve problems. I always was interested in people. I've always been fascinated by people. The successful people are so dedicated. They work so hard. When they come to work, they're switched on. They give it their all. And I noticed the people that were not switched on, they didn't care. They didn't care about the quality of their work. Close enough was good enough. Those people didn't make it very far. The easiest way, and I talked to some of those people because they had incredible potential. And I said, what's going on here? I see so much in you. Why don't you just put in the hard work and discipline? And they explained to me that there were personality crises and different things happening. And I helped them to see a different path, which is it's not about personalities. You go independent of everything and you just give the very best that you can give. Those people transform their lives, their incomes, their relationships, everything. If you put in the hard work and dedication and discipline, you will transform your life incredibly. And I know many people on our channel inside our community are so dedicated. This is a real shout out to you. Well done. And for all the people that are wanting to be dedicated, wow, awesome. Go for it. You can only get up to this success level and improve your life. Just like you, cryptos and Bitcoin have so much potential, but they have to put in the hard work to get the uptake, which makes the reality of growing and prospering and creating a better world. When we talk about a better world, it's really good to look at casebitcoin.com. Here we see the 10-year return on investment for Bitcoin at 236,000%, comparing against gold at 13% and the S&P 500 at 223%. Now, people look at this and say, that's it for Bitcoin. Bitcoin can't go any further. I'm going to just draw some bands and different things around it and constrain it. You know what the problem is? Bitcoin doesn't know that those bands exist. What does Bitcoin actually know? Bitcoin and cryptos know that they're growing at an exponential year-on-year growth rate. It's literally, we're at the start of the internet in terms of being at the start of crypto. Things are going to explode. I've talked about it many, many times on this channel inside our community. If you haven't seen those things, you might like to look back at past episodes and see, because we do deep dives on that. Let's go a little bit further. In terms of the uptake of crypto, it's really good to look at the number of blockchain wallets users worldwide. I can't speak today. Anyway, that's 74.74 million number of Bitcoin blockchain wallets. Now, how does that compare to the internet? Say one wallet was equivalent to one particular person on the internet. What does it look like? If we compare the number of internet users worldwide to the blockchain number, look at that. Look at the difference. 74.74 million is all the way down here, just like at the foot of that. This is why the explosive growth rate of crypto and this related technology will overtake and completely transform the world. We've had many examples of very expert people in past episodes predicting what would happen to the internet being proven utterly wrong. Like, for example, e-commerce is not ever going to happen. Wow, Jeff Bezos didn't listen, and all the other e-commerce companies didn't listen either. I'd like to show you a really cool chart that can help you understand the behavior of Bitcoin and cryptos better. When I say Bitcoin, it's just a proxy for all cryptocurrencies. Cryptos are exponentially moving assets. What that means is they have bouts. They're like a bubble. Fair enough, we'll call it out. They are like a bubble. They bubble up with euphoria and bubble down with capitulation. They bubble up with euphoria and they bubble down with capitulation. They bubble up with euphoria and they bubble down with capitulation. We haven't seen these two things in this cycle. That's important to keep in mind. Another good thing to remember is that investors are always hunting for the best possible return. This is the NASDAQ 100, the stock exchange major index. NASDAQ, just like everything else, is always moving in a wave. It's doing a wave up, then a wave down, up and down, up and down, up. Now, what happened to Bitcoin during this process? You see this sell-off? This gold line is the Bitcoin fingerprint in the background. We saw when there was a sustained uptrend here in the NASDAQ 100, when it sold off, what happened to Bitcoin? It kept going up. Now, the money came out of Bitcoin, went into the main market. When this starts to wave down, as I predicted about 4 days ago, people were saying it's going to go up and up and up. I said, no, I don't think so. I think it has to complete its wave. It's got to do a wave up and a wave down. It may not necessarily follow this line that I put in, but the concept, it needs to do a wave down to be healthy. It's just normal price behavior. When the investors in this cash their money out, they will see Bitcoin being so suppressed, more than 50% off its full all-time high, and recycle the money from one market to crypto. It's really important to understand the dynamics of the interplay between markets. It's going to be really interesting, and we've seen so many signs of Bitcoin improving underneath the hood. Rule 181 is incredibly important. Compare same psychologies. This represents how we look at the KS model. A lot of people, when they're new to crypto, think crypto is just like a normal market. It is not. It's open, 5.17 times as long, and has 10 times the inherent volatility. It really moves up and down in an exponential fashion. You will hear a lot of people talking about rockets going to the moon. The rocket takes off, goes up and down, has some mid-air refuelings coming up and down, and it eventually goes to the moon, and it hits the moon, and the moon says, "Get out of here, rocket, go back to Earth." And the rocket absolutely does that, and it decreases in price by about 85%. So when you're in a bear market, the overwhelming psychology is negative. When you're in a bull market, the overwhelming psychology is positive. When the rocket finally does its touchdown, it is above the mathematically protected all-time high of the previous cycle. This is critically important to understand. If you understand this one thing, you're ahead of, I think, about 98% of other people. The 2012 cycle, all cycles go in 3 phases: bull market, bear market, consolidation. Bull market is sunshine, bear market is darkness, consolidation is dawn. The sun is just starting to come up. It's really important that we compare the same psychologies. We compare sunshine to sunshine to sunshine. We compare darkness to darkness. I have seen so many people compare darkness to sunshine, and there is no meaningful comparison that can be made in an exponential market. We have to follow the same behavior. When we're trying to understand this particular bull market psychology, we need to go back to the previous one and back to the previous one. If we cross psychological boundaries and start comparing a bull market to a bear market, we have an overwhelming positive psychology in a bull market, an overwhelming negative psychology in a bear market that eventually results in capitulation towards the end. You can see that capitulation towards the end of the bear market. These things are really, really important to understand. Now you say, Ken, what is a mathematically protected ATH, all-time high? It happens in crypto. Whenever the bull market, whenever the rocket hits the moon, it hammers in a mathematically protected all-time high. Why is it protected? Okay, when the next cycle comes in, the bull market of that cycle, the rocket takes off, hits the moon in the next cycle, when it decreases 85% in value, that low does not come below the previous all-time high because it's mathematically protected. It's really important to understand Bitcoin is literally mathematics in operation. It's not like a stock. It's not like Forex. It's not like anything. It's a completely different apex asset class. Now, we see when the rocket hits the moon in the next cycle, it hammers in a mathematically protected all-time high. What it means, when the next cycle comes along, the cycle we're in, the 2020, when the rocket hits the moon, the sell-off, be it 85% or otherwise, will not cross the mathematically protected all-time high of the past cycle. This is critical to understand. I know some very smart people out there that just don't get it. It's in the charts. If this is the price of Bitcoin, if you look at the price of Bitcoin, it's clearly evident that that is the case. I think potentially some people make a mistake and think some random line drawn on a chart will potentially set a top or a bottom or the growth rates. It's important to go outside the charts into the fundamental analysis as well. This is a fundamental analysis perspective. We can see the adoption. One day, every single person on the planet will be connected to crypto. Just like there will be one day where every single person on the planet is connected to the internet. That takes time in some regions, but it will definitely happen. Let's think about what a blockchain wallet actually means. At the moment, you may have your wallet or purse, or you may have your money in your pocket. How much cash do you actually use to pay bills and to buy things? Is it like 10%? Or is it 100%? I know for myself, probably about 95% of my purchases, if not more, are digital by nature, either through a credit card or some sort of online transaction. Many people are in that same position. It really depends where you're at, but it's quite common now, and it's getting more and more and more common. So how do I get to this number of 132,418? If we take 1% above the mathematically protected previous cycle all-time high and then inverse the 85%, we get that 132,418. Price cannot come below that. But you know what we see? Price is very much above the previous all-time high when it capitulates. To think that it could wipe out all of this value and literally just breathe on the mathematically protected all-time high violates another couple of rules. You can see it in evidence here. 1 year, 2 years, 3 years. This is Bitcoin return on investment. Look at those percentages. The basis, even if you look at a percent year on year through the compound annual growth rate, you can see these percentages are overwhelmingly positive. We're not going to get into a position this early in adoption. I'm not saying that we won't get in a position later in adoption. I'm saying for this particular cycle, we're really, really safe. I imagine you're saying, Ken, how did you get this 43,320 and this 72,900? That's a really fair question. If you take 85% off 288,000, you get 43,320. And if you take 85% off 486,000, you get 72,900. Now, what we know is the sell-offs in the bear market are actually decreasing in severity. I've used 85% for conservatism. Now, why did I do that? Why didn't I just use 81%? Because that would have made these numbers higher. I do that because I think it's more important to just give a conservative view. I can hear you already asking, Ken, well, tell us what those numbers would be. The 43,320 would go to 53,454. The 72,900 would go to 90,204. You can see why I like being conservative. This is an exponential asset class. Things tend to move around very quickly. If we're more conservative, I believe that's better. From my training as a first and second year stats lecturer, that's how I like to play things. I'll just do a really quick recap on the length of this current bull market psychology segment of the 2020 halving cycle. What we need to do is to go back to the blue sun, this 2012. 2012 was 367 days. That's that blue sun. That's where it comes from. In the next cycle, in the bull market, we put that same dot, that same blue sun there, and that witnessed a massive sell-off that recovered. It's pretty interesting. We've seen pretty much the same thing here as well. Same period of time. Okay, you see that between these two following cycles. Now, the particular bull market cycle in the 2016 halving cycle went 43% longer than the previous cycle. Now, that's 159 days more, which was quite a shock to a lot of people, I can tell you. That's the nature of exponential price. So we put that green sun from here, this 526 days, we put it in here, And that is our next target up around that area for this recovery. Things will move in a wave. Now, why do we have this white sun? We say that from the blue 2012 halving cycle to the green 2016 halving cycle, there was a 43% gap, which was 159 days. We apply the same level of base logic to say that this cycle should at least be 43% plus. That would be 228 days more than very many people expect. And I could do other things. I love maths. I can do all sorts of mathematical things to this, but I think let's just be conservative. Let's just look at the fact that this increased 43%, so that as a benchmark, as a basis, would be quite reasonable. A lot of people say to me, Ken, how can it get up so high? Do you realize the market capitalization of all cryptos for it to reach there? When we look at how crypto moves, you don't need to have the market capitalization to move it. It's all based on price. Price can whipsaw very, very quickly up and down. It only needs to come up and touch this line, around that line, to fulfill that peak. That's something that a lot of people miss as well. They think the money has to be physically transferred into the market. It doesn't have to go that way at all. Just to help you understand that a bit more, let's zoom in to this particular area, which was the sell-off in the 2016 halving cycle, just in there. Let's have a look what it looks like. Here we are. We're all zoomed in. In 3 days, price moved down and then back up 60.55%, nearly taking out that previous high. This is how volatile crypto is. I always say crypto is volatile. This is what I'm talking about. Notice up here, as price got above that previous all-time high, it came up and look at this. It just collapsed back and then it shot up. This is the way and nature of price movements. Crypto is incredibly volatile. I said it's the hardest market on the planet to trade and invest in. That's why you need so much guidance, and that's why we need to do this twice a day. Now you know about the protection of previous cycle all-time highs. They're mathematically protected. That's embodied in Rule 712. If you ever hear people saying that a particular line can be broken without a black swan event, black swan events can definitely break mathematically protected all-time highs. But we don't worry about those. They're temporary and there's nothing anyone can do about it. Peter Lynch, one of probably the best all-time fund manager, said that more money has been lost by preparing for a downturn and a crash than has ever been lost in the actual crash itself. We don't care about crashes. It's really important to note, if you care about crashes, there is a better way. Just don't worry about them. I know that's hard news to accept, but it's really important. That's the only way to survive in these kind of markets. So let's go back to our list. We've explained the 43 and the 72,900, these two numbers here. We've explained the minimum high of that 132. We've explained the critical importance of mathematically protected previous cycle all-time highs. We've talked through the 3 phases of each segment and its different psychological states. We know that the bull market segments are increasing in size and duration. We know the bear market is decreasing. We know consolidation periods are decreasing. We know that the halving cycle length overall, when we add these components together and get a total, they are increasing from 3 years, 7 months to 3 years, 10 months to an estimated 4 years, 3 months. Now, there's been a bit of wavering around with the end of this particular cycle. I'll keep it in mind and I'll keep you updated on how things change. But at the moment, we're really only focusing on this sort of green dot area. That's the most important thing. It's also really helpful to know that the sell-off in the bear market is decreasing in severity from 86.9% to 84.1% to probably around 81.4%. There's just two pictures I'd like you to keep in your mind. At the moment, adoption is all the way down here in this little black area, 74.74 million. Look at that. How much space we have to go. And this was 2019. It's not even 2021. Again, I like to be conservative because I want you to see the truth and the reality behind these numbers. This is also a really, really good thing to keep in mind all the time. The total number of global internet users, as more and more people came on board, we had so many network effects. The world changed completely. We're going to see the same thing with the internet of value. We're going to see so many changes. Just think about the concept. We're going into space now as a race. Wow, that is awesome. They're not going to be carrying paper notes with them. They're going to need something digital. How do we do commerce on Mars, on the moon? Yeah, pull out your wallet and give them $2. That's not going to happen. It's all going to go digital. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. It would be beautiful if you reach out and say hi and let me know where you're viewing from. It's really nice to chat to people. We also have a really active community on Discord, on Facebook, of course on YouTube as well. Everybody's so positive and we really try to help each other. We're a very healthy community. So if you would like to join any of those, I'll make sure those links are in the description. Please be aware, crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.